Ladies and gentlemen, good day and welcome to the Q1 FY26 earnings conference call for Concord Enviro Systems Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Khanna from EY. Thank you, and over to you, sir.
Thanks, and good morning to all the participants on the call, and thanks for joining in our Q1 FY26 earnings call of Concord Enviro Systems Limited. Please note that we have mailed out the results to everyone, and you can also see these on our website, and it's been uploaded on the stock exchanges as well. In case you've not received it, you can write to us. We'll be happy to send it over. And before we proceed to the call, let me remind you that the discussions may contain some forward-looking statements that may invoke known or unknown risks, uncertainties, and factors. It must be viewed in conjunction with our business and could also cause future results or performance to vary significantly from what we have expressed or implied. To take the results of this quarter and answer to all of your questions, we have the management of Concord Enviro Systems Limited. Please welcome Mr. Prayas Goyal, Chairman and Managing Director, Mr. Prerak Goyal, Executive Director, Mr. Anish Goyal, Group CFO, and Mr. Abhijit Kalke, Head of Strategy and M&A. We'll be starting the call with a brief overview of the quarter gone past, and then we'll follow it up with some question and answers. Now, with that being said, I transfer the call to Mr. Prayas Goyal. Over to you, sir.
Thank you, Khanna. Good morning, ladies and gentlemen. A very warm welcome to Concord Enviro's Q1 Financial Year 26 earnings call. I thank you all for joining us today. Let me begin with a brief introduction to our company, followed by an overview of our performance for the quarter. With over 3 decades of experience in wastewater and water management, Concord Enviro is a globally integrated, technology-enabled provider of water and wastewater treatment solutions. Our strong focus remains on zero liquid discharge and energy-efficient technologies related to water. At the core of our business is enabling industries to achieve water sustainability goals while optimizing the operational costs. Our business today is built around 3 key segments: systems and plants. This includes effluent treatment plants, anaerobic digesters, ETPs, membrane bioreactors, sewage treatment system, and a range of membrane-based technologies like ultrafiltration, nanofiltration, reverse osmosis, and waste heat evaporators. Our latest addition in this space is compressed biogas or CBG systems, which we launched in April 2024. This solution converts organic waste into renewable energy, aligning with India's push for clean fuel and energy dependence. The second of the 3 segments is consumables and spares. Here we cover the critical components such as membranes, plant chemicals, and other essential parts needed for ongoing operations of the zero liquid discharge systems. The third segment is the operation maintenance and digitization. This encompasses both Concord and third-party systems with a strong focus on IoT-driven optimization. We serve a strong base of clients across pharmaceuticals, chemicals, food and beverages, defense, automotive, energy, steel, and textiles, highlighting the cross-sector relevance of our solutions. On the R&D front, our dedicated 31-member team continues to drive innovation in membrane design and system efficiency. As of this quarter, we hold 9 Indian patents with 21 additional applications in process. This deep in-house development approach defines our unique value proposition, engineering from first principles rather than just assembling off-the-shelf components. Our solutions are designed to be cost-effective, energy-efficient, and operationally sustainable. By delivering the lowest long-term operating cost in the industry, we help clients improve performance and sustainability outcomes, both of which are increasingly non-negotiable in today's environment. Now turning to our Q1 FY26 performance, I'm pleased to share that this has been a quarter of strong momentum and positive traction across segments. Q1 is more focused on setting the strategic focus for the year and preparing execution strategies for the large orders we have, including design completion. While our order book and smaller ticket size order, our current order book, has a H2 heavy delivery schedule, including on the export and the CBG front. That's something you will see different from the previous financial year. While our order book and ticket size and smaller ticket size orders that we are likely to close out in the coming months project a growth of 18 to 20% this fiscal, we continue to aim for a few strategic orders to strengthen and build on that order book. The major developments that I'd like to share with you during the quarter have been we've successfully onboarded marquee clients across core sectors, further reinforcing our position as a trusted sustainability partner. Our product business is showing promising traction, and we expect this segment to scale up meaningfully to about 10% of overall sales over the next 3 years. We're also making early moves into high-potential domains such as solar, photovoltaics, green hydrogen, carbon capture, and semiconductors, engaging with industry leaders in these spaces to co-develop future-ready solutions to add value to their businesses. As on 30th June 2025, our order book stood at 5,366 crores, up from 5,327 crores as of 31st March 2025. Our R&D team is currently working on key initiatives in not only wastewater applications, but also process separation applications. We recently bagged our first order in product concentration for a pharmaceutical product company replacing evaporation. We are also developing several applications using our thermal solutions to enter into such process separation projects. Segment-wise, about 59% of our order book relates to ZLD type projects, 15% to compressed biogas or CBG orders, and 26% is linked to our operation and maintenance contracts. In addition, we are actively pursuing quotes under discussions of approximately 2,500 crores with healthy conversion prospects. On the project execution front, our international projects are progressing well. In particular, our first Mexico project was successfully commissioned in July 2025. In the O&M segment, we recently secured significant orders, 800 million rupee order from a large listed customer and a 125 million order from a customer in Mexico. In the S&P or the systems and plant side, we received an order of 150 million from another big automobile client for FY26. From an organizational perspective, we continue to invest in strengthening our leadership and onboarding senior talent across strategic functions such as supply chain and project execution, and preparing ourselves to deliver efficiently on all of the exciting growth that we can see coming our way from the pipeline. This is reaffirming our commitment to operational excellence and long-term growth. With that, I'd now like to hand over to Mr. Prerak Goel, Executive Director, to take us through the financial performance for Q1 FY26.
Hi, good morning all. Just like to talk about the Q1 performance in FY26. So our revenue for the quarter stood at 1,024 million, broadly similar to the Q1 of FY25. EBITDA came in at 107 million, up from 15 million in the same period. This does include some gains on the peso exposure and also some IPO-related cost recoveries, offset partially by a loss from our discontinued blue water business. The adjusted EBITDA, excluding these one-offs, stood at 27.5 million. PAT for the quarter was 51 million compared to a loss of 26 million in Q1 FY25. To conclude, I would like to reiterate the three key structural drivers that we believe will continue to support our water treatment and reuse industry's growth and our long-term positioning. The first one being the increase in regulatory stringency around water treatment and discharge norms. The second being the rising importance of water security. This is both in terms of the availability and the acquisition cost of water. And lastly, the growing emphasis on ESG compliance, particularly by large global corporations. With that, I now open the floor for questions. Thank you once again for your continued support and interest in Concord Enviro.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, a reminder to all, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Dheeraj Ram from Ashika Group. Please go ahead.
Hi, sir. Thank you for taking up the question. So there is a dip in EBITDA margin if you kind of exclude the other income. So even the YOY. So could you please let me know why there's a dip and how should we look at for the entire year?
Hi, Jayesh. Thanks for that question. So there's no change in the projections for this year. The current quarter one EBITDA is negative primarily after excluding other income is negative primarily on account of the employee expenditure. If you look at the expenditure, it's pretty much in line with Q4 of FY25. This is obviously the ramp up that we have done to kind of support the execution and the large turnover growth that the company is expecting. So over the year, as we achieve our targeted growth rates, this will help. The EBITDA will fall in line with what our margin profile has been for the previous years.
Okay. And you said that your order pipeline is 2,500 crores. What can be the conversion and what are you expecting the order inflow for FY26?
So generally, our blended, we have both domestic and international pipeline. Our international pipelines conversion rates are slightly better, but on a blended basis, we generally look at about 25% of these getting converted. Our order intake for the full year should be in the range of 600 to 700 crores, which will give us, the projected growth rates, for the oncoming years.
Okay. So last question, sir. Since you're maintaining the growth guidance of 18 to 20%, and we are saying H2 will be heavy, how do you see how much revenue is expected to come in Q4?
We probably don't have a quarter-to-quarter breakup at the moment, but we expect generally H2 has been about 60% of overall growth rates. So, it'll be in the range of 60-65%. H2 will be in the range of that now. Q3, depending on how deliveries go, and they should be almost equal, I would say.
Okay, sir. Thank you.
Yeah.
Thank you. Our next question is from the line of Sonia Varnikar from Dalal and Broacha PMS. Please go ahead.
Hello, sir. Am I audible?
Yes, you're audible.
Ma'am, you're audible.
Yeah. So thank you for the opportunity. So my first question is on the quarterly run rate of the execution of the orders. I know YOY there's not much change, but if you see quarter on quarter, it has come down drastically. So if you can explain on what has led to that, that is first question. And second question is again on the other income. If you can briefly explain us how much portion of that is one-off kind of a nature and how much is like a regular other income?
Okay. So let me just talk about the quarter-to-quarter, movement in sales. See, in terms of our project business, and which is primarily composing of the S&P sales, this is a bit lumpy, right? So depending on the type of orders we've got and the delivery schedules that we've agreed with our clients, there would be some lumpiness in our project-to-project business. Generally, based on the industry, there is a lot of capex cycle which turns into orders, in let's say the closure of H1 or beginning of H2, and then these projects tend to get delivered towards the Q4 period. So Q4 has always been one of our strongest quarters, and this has been historically the case, and I believe it's similar for most players in this sector. So the quarter to quarter is very difficult to kind of judge because the project business is going to be lumpy there. If you see our non-project business, which is the O&M and the S&P, you will see that the run rates are pretty much similar to what they have been, and there's growth there. So those obviously segments are definitely growing. Coming to the second question, in terms of the other income, so there's a total other income of about 15 crores. There was some IPO expense recovery to the tune of 4.5 crores, and there was some peso gain that we had reversal, which was to the tune of 4 crores. So I would say this 8.5 crores is pretty much one time. We don't see a repeat of that. The other expenses are interest income and some gain, which is in the normal course of business. It's not a one-time kind of a thing. We do have those movements because of interco transactions and some of other transactions, which will continue to be on the book. So whether it's a loss or whether it's a gain, it doesn't get excluded from our EBITDA calculations.
Okay. Thank you, sir. I have one more question. For the current order book in hand, what is the execution timeline for that?
So, I mean, see, the blended period would be about a year. So, I mean, if you look at it, most of the S&P orders we have, I think, barring the commissioning payments, it would be completed in this year. As always, the O&M order book that we've given you is the 12-month rolling order book. So we do not give an orders which are, even though orders are signed for longer periods, the number in the order book is only the next 12 months orders. So there, 9 months of those orders will obviously get again executed in this year. The consumables and spares are current orders which are expected to get delivered. So on a blended basis, I would tell you it's generally about 9 to 12 months. Yeah.
Okay. Thank you, sir. That's it from my side.
Thank you.
Thank you. Our next question is from the line of Ankur Gulati from Genuity Capital. Please go ahead.
Hi, thanks. What is the value of pure EPC work done in this quarter?
If you look at the EPC work that we've done this quarter, is to the tune of about 50 CR, 50.7 CR, yeah. Oh, EPC. Sorry, you're talking about that systems and plants. So you're talking about the value of EPC in this?
Yeah, I mean, typically if you take a bigger project for a client, you also do basic civil works, right? So I'm trying to understand what is...
Correct. So in this particular quarter, we didn't have any major EPC execution that we had. We have a couple of orders which are, they have some civil and some, last mile installation work, but those are likely to get executed in H2. So in this quarter, we've not had any EPC turnover.
And of the total order book in hand, what percentage is non-water treatment related pure EPC or civil works?
So see, in our export order book, we have 2 projects in Africa, and of that, about $2.5 million worth of orders are, I mean, let's say not orders, but $2.5 million worth of work is civil and installation work. So about 20 odd crores out of the overall book of 520 crores would be, let's say, an EPC, pure EPC, where we are doing civil and installation.
Okay. What I'm trying to understand is, why, if the EPC component is low, the GP has come down to 41% if I exclude other income.
So you're saying the GP has moved to 41%?
41%. What I'm doing is I've taken operating revenue and cost minus, so I get to some 42 crores of gross profit. If there is no EPC or less.
I don't know. The way we're calculating it, gross margin is about 50. So I'm not so sure how you're calculating it.
Okay, anyways, your employee cost of 24 CR, that is, I guess, good enough for you guys to achieve whatever revenue growth guidance you have given it.
Yeah.
20% revenue growth. So what we need to do is basically normalize it. Is that fair?
Yes, that's
your run rate will not go away above 24 CR per quarter.
It will be in that range, yeah. I mean, plus or minus small, because there are some hirings in process. So, but again, nothing which is going to substantially increase that.
And same with depreciation?
Depreciation, I think, yeah, because, I mean, if you look at the current investments that we're doing, at least right now, there's not much major investment that is happening. We had one of our product investments that came in last year, but yeah, nothing major.
Any further progress or discussions on the BOT models? Are you planning to bid for something or not yet?
The BOT?
Yep. I guess you have a small joint venture, right? Where
yeah. So see, the BOT business is obviously, showing a lot of potential. We have some marquee orders that we signed off on that in this quarter, in fact, which is ongoing right now. So I can't talk about it directly, but yeah, I mean, that's been a business which is, as usual, showing a lot of exciting growth. Yeah, we definitely believe that that's going to be the next growth phase. Water as a service is something that is, is kind of picking up rapidly.
Can you just give us some broad color? One is, of course, the whole execution order book comes in. And then on an annuity basis, what kind of O&M numbers will that throw? Let's say if you're putting 20 crores, then what will be the O&M revenue as percentage of the 20 crore invested in a BOT?
So, I mean, see, the O&M is generally about 8 to 15% of the capex that a customer invests in. That's generally the window. Obviously, when it comes to BOT, then there is also the recovery. So, but I mean, the way it's accounted in the Concord books, it would be a turnover of between 8 to 15, depending on the type of industry we're dealing with.
And you guys are staying with minority, right? You're not taking the majority of any of these.
Sorry to interrupt. Ankur sir, can you please take your device a bit distant from you because your audio is muffling.
Sorry, you guys are not taking any majority, right? In any of
yeah, see, Concord will continue to hold a minority position in this company. We're in fact looking at investments there, so yeah, it'll continue to keep holding minority.
And how's the Dubai business shaping up? I guess you have some sort of a joint venture there also.
The Dubai joint venture is into into our thermal solutions. So yeah, I mean, that's again taking some exciting turns. We've a lot of products we've put out in the evaporation space in this last 2 years. We're currently, in fact, as we talked about it, we're currently broadening that scope of that thermal solutions to even, in fact, go into product concentration solutions. So that's something which we are quite excited about.
That's all very nice.
All right. Thank you, Ankur.
Thank you. A reminder to all participants, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. Our next question is from the line of Dhavan Shah from AlphaCurate Advisors. Please go ahead.
Yeah, thanks for the opportunity, sir. So my question is on the order book of the business. If I look at, there is hardly any growth in the order book over the last 2-3 quarters, despite, there is 2,500 crores of order pipeline. So if you can help us to understand, segment-wise, these 3 segments, what kind of order inflows do we expect during this year versus the last year? That is my first question. And what kind of, the order book do you envisage to close by the end of this year across all these 3 segments?
Right. Thanks, Dhaval. Thanks for the question. So, Dhaval, a couple of things. I mean, see, we have the way we're kind of projecting our order book is, we're kind of talking about the orders that we have, the value of which we're going to be executing in 12 months, especially on the O&M side. So, for example, we spoke about an 800 million order we got from a large listed player on the for the O&M side. Now, this is a 10-year contract, right? So, I mean, there are a lot of orders which are signed, but it's just the way that we have been projecting our order book because the relevance is what we're going to execute in the 12 months. So that's what we're talking about right now. On the S&P side, yes, things have been, I would say, we're executing and we're kind of picking up similar order values. So the order book presented is you're looking at in the range of about 530, 540 on a regular basis. But, we have those short-term orders that we keep closing and we keep getting executed in the next 3 to 4 months. So this kind of cycle will continue with us where we have a mix of short-term as well as long-term orders. As projected, we do have a target of closing our, FY26. We intend to close that with an opening order book of about 600 crores for FY27. So that's really the target. But I mean, obviously, there's a lot of opportunities out there.
Understood, sir. And in terms of the revenue guidance, I think in FY25, if I look at, despite the order book is more or less the same in FY25 versus 24, still I think we did roughly 20% YY growth. That is also, you mentioned that is because of the short cycle order.
Yeah.
So in FY26, what kind of revenue growth are we expecting?
Yeah, so yeah, we're expecting about 18 to 20% revenue growth in FY26. And if you see, if you compare the order book back to 24, when there were a lot of, the large international orders, This time, instead of that, you'll see there's a more kind of a spread of small to medium size orders, and those are the ones which we expect strong closures. In fact, among that 2,500 crore kind of pipeline, there are probably about 150 crores which are kind of imminent closures, which will, which we are very confident to bring that kind of growth coming into this FY26.
If I now do calculate the F26 numbers, so I think we are expecting roughly 700 crores, 720 crores kind of the top line numbers on full year basis, of which I think we did 100 odd crore in first quarter. So the 600 crore execution we are expecting, how it will be pan out over the next 3 quarters?
Yeah, so typically, I would say 60 to 65% of the turnover is going to be in H2. So about 35 to 40% will be in H1. So yeah, I mean, if you look at the numbers and totally we should do on about 150 odd crores, on an average. I mean, in Q2, and then it will be in the range of 200, 215 crores in Q3 and Q4. But obviously, there are going to be some changes because, there is deliveries dependent on how sometimes client civil works are going, or how, the project delivery that the client is taking. So, but
Understood.
at the current moment, that's what we are probably forecasting.
Understood. And how do we expect, in terms of the margin-wise, I think more or less gross margins are almost at around 49-50 odd %.
Yes.
So how do you see the margin trajectory? Because until and unless, we reach to the 1,000 crore top line numbers, I think more or less the fixed cost would not be absorbed to that level. So any ballpark number for F26 and F27 also?
I mean, the margin profile, we've been doing about 16% EBITDA is what you did last year. We don't expect the margin profile to change. In fact, in the 16%, we had a couple of, one time, which obviously have gone away. And so, there should be similar kind of a trend. We do plan our overheads in conjunction with the growth that we are going to achieve. So we are not compromising on margins. But yeah, at the same time, I think there is a lot of growth opportunities we're tapping into, and you will see the team building is more tuned towards that. But I don't see any immediate impact on projected margins for this year, at least.
Understood. And based on the order pipeline and the negotiation whatsoever you are doing with the customers, are you hopeful that F27 can end up with 1,000 crores top line?
It's difficult to say, but I mean, at least, we think that the business can grow at 20% plus quite easily. So that's the target that we're going with. We want sustainable growth. We want profitable growth. That's the focus. So yeah, I mean, we want to kind of making sure that we balance both objectives.
Oh, sir. Yeah, that's all from my side. Thank you, sir.
Thank you so much.
Thank you. The next question is from the line of Maulik Patel from Equirius. Please go ahead.
Yeah, hi. Thanks for the opportunity. You mentioned in the press release about 2 opportunities, one in solar and second is in a semiconductor. Are those orders are part of that, the 2,500 crore of the order book opportunity which you mentioned that? And what kind of opportunities specifically have in semiconductor?
Yeah, so thank you, Mr. Maulik, for the question. Yes, a small part of that opportunity is in that 2,500 crores because we have those kind of bids which are nearing finalization. And there would be good opportunities from zero liquid discharge in semiconductor, especially on the secondary front, wherein we kind of bring in all of our OPEX advantages. And we do have a significantly large, like a 7 million liter per day, 7 MLD, ZLD opportunity on solar, which we are pursuing and, hope to close very soon.
Okay. Okay. And in the order book, in a presentation, you mentioned that you got O&M orders from a large EPC player. Are these orders for many years, or is it only for a single year, which you mentioned? Because generally the O&M orders typically last for a longer period of time, right?
Yeah. So this is a 10-year contract. So what we've given in the presentation is the value of the order, which is to be executed over 10 years. But in our order book, only the first year value, which is roughly about 10% of that, has been considered. So the order book number of 536 only has about 8 crores of that order in the calculation. The order value is worth 80 crores.
Oh, and similarly for this, the Diageo O&M also, it's a similar thing, or you only included the first order potential in the order book?
Yeah, so the 12.5 crores for Mexico is actually the 1 year value of that contract. It's not, because that's a ZLD project, so that's only the order value for the first 1 year.
Okay, got it. And the last question is, the employee expenses this particular quarter has gone up significantly. I mean, anything specifically, is it something on a normal hike, or you are building the capabilities and hire the people for that, and that's why the employee expenses has gone up?
So Malik, I mean, it's very similar to Q4 of FY25. So it was about 23 crores in Q4.
Yeah.
It's about 24 crores. So it's roughly in line with what we had. But yes, there is a lot of team building exercise that we're continuing. So last quarter we had people in the projects division join us, and we kind of think the execution team, because as we move into larger projects, the execution team need to be upgraded. So it's all towards putting in the various people at the right positions to make sure that we can deliver the growth that we committed to.
Got it. Thanks for this. I wish you all the best.
Thank you.
Thank you. A reminder to all participants, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. Our next question is from the line of Jay Bharat Trivedi from InCred AMC. Please go ahead.
Yeah, hello. Am I audible?
Yeah, Jay.
Very audible.
Yeah, thanks for the opportunity. My first question is, what would be your order book last year at the end of Q1 FY25 closing order book?
I don't have that number handy right now, Jay, but I think it would be in the similar lines. I think maybe 480 or 500, something in that range, but I don't have the exact figure, sorry.
Okay. And the current overhead run rate that we are running on is around 40-45 crores. Correct me if I'm wrong. Is it right?
Including other employee expenses and other overheads, yes.
Yeah, all overheads.
Yeah.
Yeah, so how much it can grow in the next 1 to 2 years, this number, the quarterly run rate?
So, I mean, Jay, I think, the enhancement that is happening right now, at least on the employee side, is more, where we're kind of putting in certain heads in certain critical positions, as I said, to kind of enhance execution. Obviously, this is not something that we keep expanding. There will be some, junior level hires as we keep growing to kind of support the business. But yeah, I mean, barring new initiatives that the business is taking, I think they should relatively be in the normal range of 5 to 10%, for adjusted for inflation and some hiring.
So on an annual basis, 5 to 10% incremental is what you are budgeting.
Yeah, I mean, on a baseline basis, there are other avenues that the company always continues to look at. So depending on how those things go, if there's something changes, which there would be some additions there, but obviously it would come with growth in top lines as well.
Okay, and last year, similar period, I guess Q2 or Q3, if I'm not wrong, we had an exceptional foreign loss.
Yeah.
So how have we improved on those processes, or what changes have we done?
Yeah, so I mean, our biggest loss that had come from was the peso order in Mexico. So as you see, I mean, I think the entire year loss was to the tune of about 10 CR. I think, we've clawed back about 4.5 CR in this quarter. That project is, nearing an end. We started commissioning. There were 3 projects, the first of which got commissioned in July. So we expect, the cash flows from that project to completely come in towards the, let's say, Q2, Q3 period. And all of that, as the cash flows are mature, are kind of getting definitive. We are hedging those cash flows to ensure that there is no repeat of the loss we had last year. And
so any risk mitigation techniques or anything? Sorry.
So mainly hedging, but I mean, I think, what we've done is we've kind of converted a lot of the orders that we have in dollars. So, we're kind of now focusing on taking new orders in dollars and avoiding exposure to currencies which are, let's say, not entirely under our control or difficult to monitor or hedge for the business.
Okay, so safe to say more than 90% of our order book, international order book, is in dollar denomination?
At the current moment, yes.
Yeah.
Yeah.
Okay. And lastly, in terms of each of your segment, which of the segment you would say that we don't have any reasonable competition, at least from a domestic player? Maybe it's a ZLD or the new ventures that you are getting into. So can you brief on that?
I would say that, we have competition everywhere, but the kind of solutions which we provide, there are very few sectors that we really have competition who's providing the kind of solution that we are providing, sir. Like especially on the O&M side, the kind of solution with a guaranteed kind of a per cubic meter cost with an annual escalation. There's hardly anybody else in the market who's providing that.
Okay, so cost is a factor which helps us
the
market share.
The life cycle ownership cost, the energy cost, the carbon footprint. That's kind of more because the capex is a one time. The customer can look at that capex and look at it in different ways. But the customer is more curious. So chalana hai, we need to run this for the next 20 years, and that's going to be an annual cost that we got to bear. So the focus is more on looking at that annual cost rather than just the capex today.
Okay, got it. And with this plant capacity that you have, what is the maximum revenue we can clock, barring the other variables, capacity?
So I think, if you look at our, the capex that we have envisaged through the IPO proceeds, that should kind of get us. Our anticipation is that up to a turnover of about 1,300-1,400 crores, the current planned investment should get us there without any additional capex.
Okay, yeah. So those were my questions. Thanks and all the best.
Thank you, Jay. Thank you.
Yeah.
Thank you. Our next question is a follow-up question, and it's from the line of Ankur Gulati from Genuity Capital. Please go ahead.
Thanks. Can you just give us the gross profit margins or EBITDA margins of all three segments?
Sorry to disturb. Your voice is muffling.
Hi, better now?
Yes, now it's better. Please go ahead.
Okay. Just give us the margin profile for all, if you can share margin profile for all three segments again, please. System, plants, consumer, and O&M.
So Ankur, the way we structured, I can just say that directionally, obviously the after-sales numbers are higher. But yeah, we don't kind of have specific numbers that we can share on the EBITDA profile.
That's okay. And for F26 guidance, O&M will be what, 2-3% of revenue, or it will be higher?
For FY26?
Yes.
The O&M is generally about 20% of the overall business. And, this year or last year, we started what we call the third-party O&M division, where we're doing, O&M for other EPC players. So I think given that combined O&M profile, which will be ours, and for third party, we expect that to be in the range of 23 to 24% on an annualized basis.
So logically, there has to be some margin bump because of that, right? So let's say if last year was 16%, there should be slight bump in that if O&M percentage increases.
Yeah. So as I said, there are a couple of things there because we're also incubating a couple of businesses. So the guidance has been that we'll at least keep our margins in the range. There is some things which are contributing more. There's some things which are, let's say, in kind of ramp up mode. So there will be a little bit of a push and pull, but on an overall basis, they should be very similar.
Makes sense. And second, again, sorry, this is on the employee base. Let's say your annual employee bill is roughly 100 CR today. What level of revenue can it sustain? Can it sustain 1,200, 1,300 or?
So, I think, we have the O&M business, right, which is a little bit manpower heavy. So as that grows, you will see that There will be an employee cost which will grow because part of the O&M involves putting labor on the project side. So there is, let's say, a definite or direct variable employee cost to revenue kind of a correlation for the O&M business. For the rest of the business, if you look at our S&P, I think we can go to 1,000 odd crores, which we can get to. But the senior management, what we're looking at is the senior management is in place, and that will continue. So the project team, as execution increases, they will kind of increase. But on the O&M side, you will see that direct correlation. So it would keep having some impact as we grow.
All right. Okay. Thank you.
Thank you.
Thank you. Our next question is from the line of Surya from PCG. Please go ahead.
Hi, sir. Good evening. Thank you for the opportunity. First of all, I would like to know about the recent acquisition that you have done, Patak Utility Private Limited. So could you explain what's the basis behind this acquisition, and is there any more scope of such kind of acquisition going forward?
So this is basically done for the third-party O&M division, wherein for certain orders that we are working with, pre-qualification is required. So the acquisition is more to obtain that pre-qualification. We expect these to be small because they give you the PQ and then incrementally you can grow the business. See, there are always discussions and opportunities around further acquisitions, and if there is something that we feel is it's a good opportunity and it is in conjunction with the business that we are trying to do, then we're always open to those opportunities. So we do keep track of that.
What's the budget you have kept for these kind of M&A activity?
So if you look at what we had done in the IPO is we had kind of raised a sum of a total of about 23 crores for new tech and this was more from licensing or acquisition perspective. So, let's say a significant portion of that today is unused. I think we've only dipped into that to the extent of 3 or 4 crores. So, about 20 crores is available for us to look at such acquisitions and opportunities.
Understood, sir. The second question I have is regarding your Sharjah entity. So, historically, there was no tax for any business or the revenue that you generate from that entity. Yeah. But recently, there's a 9% corporate tax that has the UAE government has implemented. So how do you see the blended tax rate going forward?
Yeah. So actually, we are based out of a free zone, and basis of the corporate tax laws that UAE has come up with, since that entity is exporting its goods to other jurisdictions, the local corporate tax is not applying to us. So there's really no change in the overall tax rate or the blended tax rate for the business.
Understood.
And that I believe the tax is applicable if you're selling to the mainland.
Got it.
Thank you. Our next question is from the line of Harshit Rathi from HR Investi. Please go ahead.
Hello.
Hello.
Hi, sir. Sir, my question was that last quarter we have said that we have approximately 2,000 CRs of orders in our pipeline and the conversion rate is approximately 20 to 25%. So during the past quarters, have we received any orders or have we converted some of the orders, or it is just only in the pipeline and we are thinking of just the conversion rate? Or actually we have been executing or we have got some orders from the companies?
Yeah. Yes, definitely we have closed orders during Q1 from that pipeline. And also, new orders have come into that pipeline. So, to answer your question, yes, we did close orders during Q1.
Okay. And sir, the employee cost, as we could see, it is approximately 24%. So, it is the maximum range that we could see, or during the next quarters, it might reduce to 15 to 20% also?
Yeah, see, it will reduce because obviously it's a function of, the kind of turnover we have in a particular quarter. Obviously, we are forecasting much better H2. So, the full year, you will see that normalizing to a lower number in terms of percentage of overall sales.
And how has been the demand from the international client as Diageo and some of the major clients that we are into?
I think demand across international is very strong. Obviously, there, as you see the international space, there's been some resets as well. But however, looking at the overall pipeline and the conversations which are ongoing in different markets, I can say that the India pipeline is very, very exciting, but the international pipeline also remains very exciting.
Okay, sir. Thank you so much. Thank you.
Thank you. Our next question is from the line of Agam Shah, an individual investor. Please go ahead.
Yes. Quick question. Can you talk on you spoke a lot about, two new initiatives and all that you are doing.
Sorry,
so in terms of technology. Hello? Am I audible?
Yes, but your voice is not clear, sir. Can you please take the device a little bit distant from you?
Yeah. Am I audible now?
Yes, sir. Now you're audible clearly. Please go ahead.
Yeah. So can you talk on the new initiative, particularly on the technology side and R&D, what are we doing? And also on the new verticals of carbon and CBG.
Sure.
How big can they become going ahead?
Sure. So let me start with kind of the new technology initiatives in the water business. Of course, we have stuff like membranes which are capable of treating raw effluents directly, which is very excited about. We have the whole process separation piece, which bringing in process separations by using membranes and other thermal separation pieces. So those are very exciting. If you look at carbon capture, I think this is just a start, and the addressable market there is I think it's immense. If we just look at what the government of India has now set policy for the key sectors such as aluminum, steel, cement. Those itself are massive opportunities for carbon capture. On the CBG, we remain tentative on that, to the extent that we are focusing more on industrial waste, organic waste type of projects, rather than the whole biomass type of projects, which we know there are concerns related to availability of materials.
Okay. And so what are we doing in the carbon capture things?
So in the carbon capture, we have a technology which is a biological carbon capture and sequestration technology, and also has the ability to convert it into byproduct. So we are under our first kind of POC semi-commercial install by the end of this year.
Okay. And how big can these two verticals become?
As on the CBG, as I said, we're kind of tentative, so we're saying 3 to 5 projects a year, typically about, I would say about 100 crores. So we can come back to you with detail on CO2. We have not yet kind of charted numbers there, but I would say that has multifold potential compared to CBG.
Okay. And for this year, with some IPO funds, the debt repayment going down, so with the financial leverage coming in, can we see a bottom line growth of also 20-25%?
Sorry, I didn't get that question. You're saying the bottom line?
So I'm saying with the top line growing 18-20% this year, so bottom line should also be in line with that, right?
Yeah, bottom line also should be in line with that. In fact, it will create some operational efficiency, so we hope that it's slightly better.
Okay. Thanks, Mr.
Yeah, thank you.
Thank you.
Thank you. Ladies and gentlemen, as there are no further questions, we would conclude our call. Thank you. On behalf of Concord Enviro Systems Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you, everyone.